Good morning, everybody. It's the 13th of December. We are Signal Centre Talking Bull. I'm Joe, joined by Steve this morning. How you doing, Steve?
Yeah, not too bad, mate. Just thinking our TradingView stream is private. It says private on it.
Yeah, let me see if I can change that. I think I've switched it. So, yeah, anyone wants to refresh that, please feel free to go ahead.
Ah, brilliant. Okay, mate.
Okay, sorry about that. Right, so all eyes on CPIs today. So going to be a very interesting one, I think, and obviously plenty for us to get through on the charts ahead of that to try and help you set up in front of the all-important number today. In terms of latest headlines, there aren't many. It's all kind of gearing up towards this big number later. We did have US inflation expectations decline yesterday. The latest New York survey recorded a decline in the one-year inflation expectations to 5% from 5.2%. From the previous month, while the three-year inflation expectation declined marginally to 3% from 3.1%. The decline in inflation expectations will provide an element of optimism that overall inflation pressures are peaking. And of course, we're going to get some real evidence on that today. US yields edged higher despite a decline in inflation expectations. There was selling pressure in treasuries, with the 10-year yield increasing to near 3.6%. So that is a bit of a mixed figure considering what we just mentioned. And then we come on to the US CPI data today. The latest consumer prices data will be released on Tuesday and will have a major impact on all asset classes. Consensus forecasts are for headline rates to decline to 7.3% from 7.7% in the previous month, with underlying rates expected to dip to 6.1% from 6.3% previously. We've had some unemployment data, or some employment data, sorry, should I say, out from the UK today, and that continues to increase. The latest UK data recorded a slight increase in the unemployment rate, but with a strong increase in employment as inactivity rate declined. Overall earnings increased 6.1% for the year from 6% previously, but marginally below the expectations. I guess this time of year we expect employment numbers to be a bit stronger due to their seasonal impact that Christmas has. So let's go on to some charts, Steve. How are things shaping up ahead of this all-important CPI number at 1:30 UK time today?
Well, I'm going to take a look at crypto first, and then we'll dive into some commodities. And it's a real battle going on, as it has been, and this price action has been capped since mid-November. We're still it was a much better day yesterday after a poor weekend, a poor finish to the week for Bitcoin, but we posted a bullish hammer yesterday, so that looks a little bit more positive. We got down to 16,875, buyers came in, and we're still battling with this band of resistance that we've got. Now, even if we break this resistance, we then face more further resistance at the Ichimoku cloud. We've got another horizontal level of resistance at 18,164. Got a 55-day moving average coming in around about 18,000, the 100-day moving average at 18,722, and even further up between the sort of 19,000 and 21,600. We've got the 200-day moving average popping up at 28.30. So yeah, overall we remain on the back foot here. Really need to clear this resistance at 17,600 to get any way, and it has to be sustained as well. It just all the spikes higher just get sold back into. So overall, we remain very negative on all cryptos. Commodities, it's a little bit different there. We've got nice little price action going on in gold and silver, based around the dollar index, really. Dollar index has taken a little bit of a hit overnight. This is sort of lent itself, or over the last 24 hours, I should say, this has lent a little bit of a bid to gold. We have a number of support resistances to look at. It's easy for me to say. The 200-day moving average coming in now at 17.90. We're just below there, 3 cents below there. Oh, sorry, $3 below there. The pivotal level that we've highlighted is between 1765 and 1770. Major support comes in at 1730 to 35, and the major resistance is 1800 to 1810. Now we've got this double bottom formation which continues to look very promising. That target's a move to 1844. And then after that, we've got further resistance all the way up at $1,900, but we don't need to think about that just yet. But on the front foot this morning, but faces a bit of a battle. Really need that sort of dollar to continue to move lower for this to get a chance at challenging those highs. Silver seems to be riding the wave quite nicely. The inverse head and shoulders is a lot more structured and playing out in a much more straightforward way. The measured move target for that is 24.92, so we'll call it $25. Price action this morning has been positive after a slowdown in the pace of the move higher yesterday. Initial resistance comes in around about the 23.68 level. A break above there should open up the upside. There's not nothing in the form of resistance really until we do get up to that $25 level. So that for me feels like the real commodity that's really a lot stronger. Copper also is sitting just below its 200-day moving average. That had a shooting star on Friday and further downside yesterday. So a nice little challenge to the downside, but it stalled at what's forming a nice little support level, 377. And today we're trying to push higher as well. So that's on the front foot. Really needs to get above that $4 level and close above there for this double bottom, which isn't quite as clean as the silver or gold to play out. Taking a look at oil. Good, very positive move yesterday. It had a bit of a turnaround. We formed a base on Friday. We got down to 70.21. $70 was a level to watch, and we pushed aggressively high yesterday, trading now at just above $74. Resistance really coming in at $76. That's looks like we're on our way to challenge that. And yeah, with this dollar weakening, there's no reason why we can't sort of have a little further push higher today. And the same with Brent crude oil. The morning doji star formation has formed, and that's a positive sign. That's a nice little bottoming in formation. And on the front for this morning, been up close to $80. That's once we get past there, it should be sort of like quite a free run there, then to 82.35. On the downside, $75 is the level to watch. A break below there should continue this negative move. And natural gas had a gap higher on the chart yesterday after a gap higher the week before. So we've almost got a island reversal formation. It's not quite, because it did Friday. It did sort of fill the gap. If it hadn't filled the gap, then that would have been a really bullish formation on natural gas. However, Monday's price action did try very desperately to fill the gap down to Friday's high. Didn't quite get there, and today we've marched on. So we're within the Ichimoku cloud. The overall formation still remains negative on the long-term basis. We are above the 55-day moving average, and the 100 and 200-day moving average look like they've got potential to cross over as well above. So still a lot of work to do, all the way up to $740, $750, and then the right shoulder comes in at 810. So there's still a long way to go before we test the serious resistance levels, but looking quite strong this morning on the natural gas. I think we really need to understand a bit more about the dollar to sort of get a good gauge on where we think these commodities are going.
Okay, let's do that then. Let me get my charts up, and we'll start off with dollar index as usual. Very undecided yesterday, as you would expect ahead of such a huge number in the market. So if we look at yesterday's price action, we can see that we posted a doji candle. That's the second doji candle in a row, and so far today we are posting another one. So the key level to watch on the downside is this swing low that we posted on Monday the 5th of December. That's at 104.11. If we start breaking down through that, then that would be, I guess, a suggestion that the inflation number is going to come in less than expected and suggest that inflation is peaking. That would be a good thing for the markets, I think, at the moment, and we would see probably more risk appetite in the market, and that would send the US dollar lower. But I don't expect it will be a straightforward ride. I expect there will be substantial volatility. So if we break to the upside and through the kind of short-term downtrend that this right shoulder has formed on the chart, then we can start looking for higher prices initially towards 107.60, then potentially all the way up to this kind of zone up here, which will be at 109.53. So I am expecting some pretty large movement today. If we do break down below this support, then the 50% fib is the first level that I'm targeting. That comes in at 102.15. So all poised really for what happens later today. And of course, because of this dojis these dojis that we're seeing, it means that other currencies linked to the US dollar are seeing similar sort of price action. This is Euro USD, and it's struggling just below resistance at 105.95, as we can see here, posting a couple of doji candles over the last couple of sessions. We do have a fairly large band of resistance on the chart here that we've had drawn on for some time now. If the number comes in better than expected, what I mean better than expected, it needs to be worse than expected, doesn't it? Because we want a lower inflation number, then we are likely to see this breakout and continue to move to the upside, possibly into these previous highs over here around 107.93. And then maybe all the way up to this 50% fib level at 109.42. If the number comes in higher than expected, so inflation isn't showing any signs of peaking, then we can expect a pullback, at least I would say, into this range here, which is 103.47, and maybe even all the way down to 100.93. Looking at cable, again, flat, not doing a lot, stalling at resistance, waiting for this CPI number to come out today. It's stalling around 122.93. We've seen a couple of attempts to try and push through this, but so far has not been able to do that. So maybe today is the day that we do get a push through that. If not, a pullback would be potentially towards these kind of levels down here between 120.31 to 118.40. So some serious movement expected here as well. Let's take a look at dollar yen and see what that is shaping up like ahead of the CPI number. Still trading in this bearish channel, as we can see here. We've seen prices rally into this level of resistance around 137.65, which is kind of the upper end of the resistance band, and some previous lows. So be interesting to see what kind of reaction, if any, we get ahead of the CPI number. Probably not a lot, I would suggest. If again this number comes in hotter than expected, then we're probably going to get a break of this channel and a resumption of the uptrend, potentially towards the next resistance at 145.05. If we get the number come in less than expectation, suggesting inflation's peaked, then we could probably get a pullback towards this major support zone around 131.20. Let's take a look at dollar Swiss. So this is kind of grinding lower at the minute, went below support at 93.70 and still trading below that. We've got a 61.8% fib level close by at 92.88. Any other currencies that people are looking at, Steve?
Yeah, Aussie Swiss, and also got a request for New Zealand dollar.
Yeah, New Zealand dollar is strong at the minute, and it's holding up quite well. And I think if New Zealand dollar and Aussie dollar are moving higher, then that suggests that there is a pretty good risk appetite out there at the moment, maybe suggesting that a lot of participants believe that the inflation number is going to come in lower than expectations, suggest that inflation is peaked. So let's take a look at Aussie Swiss first of all, see what I've got drawn on here. So this is the daily setup. As we can see, prices were pretty choppy throughout this phase. We rallied into resistance up here at 70.68, and that's kind of capped the upside. Then we saw a decline, then we saw a continuation pattern form before a break lower. We've got a major level of resistance here at 64.11, and as we can see in more recent times, prices have just been contained within this range as it stands at the moment. So I can't say really too much about this. I mean, if you're going to trade ranges, obviously you want to be buying at the lower end, selling at the top end. So potentially an opportunity to buy that today, but it's such a massive number today that I'm not sure I want to really call it either way, because today could be the day where we get a break from this range pretty much in either direction. So if Aussie strength is being seen, so to get a break above the top end of the range, we need to see an inflation number that comes in lower than expectations, so suggesting inflation's peaked. If we see the breakdown, then that suggests that money's moving out of riskier assets and into more safe haven assets like the Swiss franc, and we could see a continuation lower with this. So as it stands from an intraday perspective, if you wanted to buy at the lower end of the range, maybe ahead of the CPI number, then the risk reward looks pretty good on that basis at the minute, because you can see we're at the lower end of this range. Maybe target something up here. Probably a bit of a long shot ahead of the CPI number today, though. So let's take a look at New Zealand dollar. So we can look at a couple of currencies here. Let's start off by looking at New Zealand dollar versus the US dollar. We can see here this is trading in a really neat bullish channel and has been now since October. We've slammed into the upper end of the channel on a couple of occasions, and that's created minor pullbacks, which have just been opportunities for dip buyers to get involved. So still trading in this channel as it stands. We've got a 50% fib level pretty close by, as well as these previous highs from back in August. So may get some resistance between 64.68 to 64.88 on an intraday basis. And again, it all depends on what happens today. If it continues to push higher, suggest that inflation maybe is peaking because they're shunning the US dollar in favor of riskier assets like the New Zealand dollar. If the number comes in higher, then we may see a break of this channel and a continuation lower in the short term. Let's take a look at New Zealand dollar yen. We can see that this is breaking out of a channel, and this has been why I watched this for a while actually, because it's been trading pretty nicely, and we can see it's in a really nice, pretty steady uptrend that's been in place really since these lows that we put in place in March 2020. So prices have been range bound for a significant period, but following the pullback that we saw in kind of October time, that put a floor in place, and prices have continued to rally higher towards this major resistance that we have at 87.34. We had a little bit of a look above this level back in September, but that was a swing failure. We saw prices then move back lower. We've had a couple of attempts to break through, and finally it looks as though we are on the march higher, taking out that previous high that we posted back in September. We haven't seen that on a closing basis yet, so I would put a bit of caution on that today ahead of such a massive number. And also we've seen what looks to be potentially 4 consecutive up sessions on New Zealand dollar versus the Japanese yen. But all in all, looks pretty bullish. And obviously you'd want to trade in line with the dominant trend, and clearly that's moving higher. Do you buy it based on this breakout ahead of such a massive number? Not for me, I don't think. I'd probably wait this out and see what happens afterwards. Maybe we'll get a push higher and then a pullback, and then we're accepting prices above that range, and then we can maybe look at some fresh long ideas from there. Hopefully that was useful for you guys.
Thanks, mate.
Okay, Steve, do you want to take a look at some indices? I've got a nice little chart I've mocked up on the S&P. But
show us yours first.
Okay. So I saw this yesterday on Twitter. There was a cheat sheet going around from JP Morgan talking about what to expect today from the CPI number, and they've given some sort of ranges about what we should expect based on certain outcomes from the number. So this is a 4-hour S&P chart. So this is the scenario analysis that JP Morgan's trading desk has come up with today. So let's just make that a little bigger. So what they're expecting in terms of volatility is pretty vast. This is, as I say, a game plan for investors today. So the expectation for the number today is that we're expecting the number to come in at 7.3%. So this is kind of the range that we're looking at here, 7.2 to 7.4. Probability of that number coming in is 50%. And if that does come in just in line with expectations, then JP Morgan are expecting the move up to be 2 to 3%. So this is where prices are at the moment. They're expecting a price rise into this potential level here, which is at 4,117. However, if it comes in just below expectations of above expectations, 7.5 to 7.7, of which they've got a 25% probability, then we're looking at this potential range here. So anything between 7.2 to 7.7, we could get substantial volatility on the day of nearly 7%, according to JP Morgan.
That's pretty punchy, isn't it?
It is very punchy indeed. So really what we all want to see is 6.9% or lower, and they've only marked that as being a 5% probability, and suggesting that the move up could be 8 to 10% on the day if we see a number coming in less than 6.9% today.
Wow, that's definitely a warning to make sure that you're not holding anything position wise over that, waiting for that number to come out.
I mean, you've got no chance, I don't think. There's going to be so much volatility potentially around this number. It's really, hyped up, and it could be pretty massive, right?
Yeah, I mean, it sort of stinks a little bit for me as well, because obviously we're going to talk about gun to head in a minute. I went short of a Dow yesterday, and got to sort of like take my medicine because it was around this position. We were trading all the way down on the support line, and then it feels like someone's come out with, or someone knows what's coming. I mean, how would that translate into Dow though? I mean, if you would get
I guess it'd
similar
be the
sort
similar
of,
sort of percentage moves.
well, you'd think so, but I mean, you're talking about thousands and thousands of points in the Dow.
Yeah, well, it'd be the biggest one-day rally of all time if we got a 6.9% or lower, according to JP
Wow.
Morgan.
I mean, what about that, Joe? I mean, that sort of like fills me with like bullishness today, because it feels like it's all primed and set up ready for the Santa rally to come in one hit. Now, yeah. Anyway, but I'll just take a quick look at my. I'll talk about my gun to head in a minute, but this is pretty much what I was looking for. I was looking for this break of the bearish flag. However, as all technical analysts should know, and all traders should know, you should really wait. But this is the gun to head issue that, or the gun to head problem that we have. We sort of have to make a trade idea call live on the show. So with this formation, a bearish flag, you'd wait for a break of the flag. And we didn't get that. If I was just basically tossing a coin thinking we're going to break that flag because of the show's rules. But if you're sitting at it and you've seen support buyers coming in at these levels before, then really the better risk reward trade would be to buy it because it hasn't broken, have a stop just below, and look at that. That would have paid off dividends there. I mean, your risk when on the show, whatever time it was yesterday, what was it trading? 33,438 or something. And your stop just has to be below 33,400. So even if you have a 100-point stop, no, you had a good 500-point rally, a good 5-to-1 risk reward there if you're targeting a move back up here. Anyway, but yeah, so on the front foot, the Dow, and get rid of that. The main picture I want to look at it, obviously on the Dow, is the daily chart, which we had this really long-term downtrend, hit a couple of sort of decent levels and reacted from it 3 times. Then when we actually broke through on the 10th of November, we came back, we retested that downward trending resistance line, and it held really nicely. Since then, we've sort of like gone upwards to sideways. We had a bit of a pullback over the last week, but we've held very strongly. And yesterday's bullish outside candle might be a forerunner to this figure that we're expecting. Now, if we do get a really sort of decent number come out below 6.9, as Joe said, this will sort of like target a move right back up to these resistance levels here. So it will play out really, really nicely indeed. On the NASDAQ, we've got this inverse head and shoulders. This will obviously have a positive effect on the NASDAQ as well. And we've got levels to watch above, the downward trending resistance coming in at 12,178, and the 200-day moving average coming in at 12,400. But all these levels could potentially be under threat if we do get that decent figure out. So what has the Europeans done about all this? So this could be the real trade of the day. If say we do get a positive number coming out, the US markets rally through the ceiling, and over in Europe, the indices are just going to get carried along with that, just because the way the whole system is automated to sort of like get some coverage. If you get short and you sort of your short position or your short model is picking up too much, it'll start to buy other indices. So it'll just be a natural knock-on effect. FTSE's been under quite a bit of pressure of late. So I mean, we're sitting just above decent support level, 74.24. But above, if we are going to get that sort of rally, we're going to find resistance all the way up to 7,700. That for me would be maybe an opportunity to fade it, because it feels like the impulsive move is over and we should now be getting a decent correction. Or is this impulsive move, is this just wave 4 of 5 waves? Well, even if it is, the 5th wave would end up around about 7,700 potentially. Wave 3 would be the longest, so that'd play out really nicely. And again, good potential for selling into it, but obviously wait for a confirmation of a stall in that rally if it happens. And the DAX as well. This is this impulsive wave higher. It's like 1, 2, 3. Is this the 4th wave correction potentially? Yeah, maybe. And then the 5th wave could be higher still. It definitely makes me a little bit nervous of my short DAX position at which has got to stop at 14,600. I mean, that'll be just like wiped out completely should we get a good number. So I might sort of take my medicine now. But is that the wrong thing to do? I mean, then you're just gambling on what the number's going to be, which we don't. No one really knows. Well, no one on the outside knows. Someone on the inside does, by the looks of the Dow yesterday. The other markets we've been taking a look at, inverse head and shoulders in China 50. Measured move target for that is all the way up at 14,400. That could be on the cards if we do get that push higher. And again, the really a cleaner inverse head and shoulders on the Hang Seng, and the measured move target for that is 22,170. And that, again, these all look positive. 200-day moving average we're pushing at now. So really need that sort of like clear break above the 20,000 level on Hang Seng, a close bit above there to sort of like really make that look a little bit prettier. The 200-day moving average in the China 50 is 13,336. Yeah, that covers off that. So I'm nervous now, Joe. Now you show me that chart. Isn't it funny?
Yeah, well, I think everybody needs to be a little bit nervous about it today because it's not generally something that we get overly excited about, the inflation numbers, but of course it is the main topic at the moment. So we need to approach this with caution. And if you are involved in any market today that's linked to the US dollar, well, particularly anything really, I think it could all have a knock-on effect. You need to be very careful. You need to have appropriate risk management, and you need to be aware that this volatility is likely to occur. So we're going to have a little play around with the gun to the head trade ideas now. This is just a bit of fun that we participate in every day. Steve and I pick a trade idea live on the video as if we had a gun to our head. We don't give it an awful lot of thought. It's not deemed to be, or we don't intend it on being investment advice or trading advice. It is just literally a bit of fun. We have a stop and a target on each of the ideas. They're all placed at market. We have risk reward ratios better than 2 to 1. And we just hope that over the course of time, we can pick a few winners as we go. We do publish these all to our TradingView profile. And if anybody wants to check them out, you can do so at signal_center. I'll show you yesterday's trade ideas just so you can get an idea of what it is that we do here. So let's bring that up. This is our profile. Yesterday, I was looking for sterling dollar to continue moving higher as it had been of late. Just looking for a pretty simple 2 to 1 on that. It did continue to grind higher, and at the 9 o'clock close, when we closed these trades out, regardless of the outcome, I was on side at 0.74R. And Steve, as he's already mentioned, went long of the Dow, short of the Dow, looking for it to break this major support here that we had on the intraday charts, and it just rallied in a straight line, pretty much. Ripped through resistance levels with absolutely no regard, and is very much on the front foot as a result of that. But what's going to happen today, nobody knows. So Steve, we've got to try and pick another couple of ideas today. I think I'm going to go with the S&P 500 based on that chart, just so it doesn't go to waste. I can get that published up to our TradingView profile, and I'm going long. I'm going for the top target. I'm thinking it may come in less than 6.9%, and we could get a pretty substantial rally. So I'm going to try and buy at the current price of 39.92. I've got a stop loss at 39.07, which is just below these lows here. And I'm going to target a massive move in the S&P 500 today up to 40. In fact, I'm going to make that a round number, 40, just below a round number, 43.98. 43.98, giving me a risk reward ratio of 4.6 today on that. This is pretty mad. So, you know, I've put on here, this is not advice and this is a gun to the head challenge, just to caveat it. But this is purely based on the scenario analysis that JP Morgan have done. The expectation, just so everybody aware, is 7.3%. So there's a 50% probability of the number coming in this range. And even if it is in line, they are expecting a move higher of nearly 2 to 3%. It's all hypothetical, of course.
Yeah, and just one thing we've sort of got to think about as well. What about like Black Friday as well? I mean, Black Friday went pretty well, I thought, for so spending was like, have people slowed down in spending, Joe?
Not ahead of
I don't think they
Christmas,
have.
surely.
No. So are we looking at this the wrong way? We're sort of like, me and you concerned it like could be a really good, really low number, when in fact it could be the complete opposite. I think we've got to go with, I'm going to play devil's advocate, Joe. I've sort of talked myself into going short. That's the big bad bear in me. You can't sort of like shake it off.
Well, hopefully one of us is right then. Go on then.
Well, okay. Let's, I'm looking at Dow and I can't find any real reason to sort of sell it. So like ignore that one for a minute. The only ones I can sort of like find reason to sell is actually the sort of like the FTSE and the S&P. They're looking a bit more negative, but it's not going to be as fun, is it, as this one? So hang on, we've got a little bit of a shooting star happening at the moment. 8 o'clock to 9 o'clock. We've got another 25 minutes to go. At previous, let's see, can we go back here? I mean, that's a bit of a band. I like this band. This band of resistance here. And we'll color it red so we know it's resistance. Oop. So we can see this has been quite a pivotal point. Resistance, broken lower, stayed lower, broken up through resistance, acted as support, broken down through it, broken up, resistance. And is this the break up or is it a breakdown? It seems like it's a level, and I'm going to go against what I did yesterday. I'm going to treat it as a level, and we haven't broken it yet, so have the stop just above. So yeah, I'm sort of like going to go the opposite to you, Joe. And what you're saying, percentage wise, we can sort of like we can really have some fun with this one.
Well, so if it comes in 7.8% or higher, of which JP Morgan has said there's a 5% probability, they are suggesting that the market, the S&P 500 reaction could be down 4.5 to 5%.
Okay. I mean, that you're getting close to limit down levels. So this could be a really frightening one. It could really put the cat amongst the pigeons. Now, so we're trading at 09. Let me just round it down. So I am giving points away just so I know what I've got to. Oh, Joe, nervous. Oh, wrong
if
one.
we're free, Steve, should we do a video over it?
Oh, shall we? Yeah. Yeah, why not?
All right, let's have a look at the calendar today and see if we can get a stream going.
Yeah.
Over CPI. We can hold a few hands over it.
Yeah. Here, what about this? 8 to 1 risk reward, Joe.
Yep, love that.
Selling at 11,709. My stop is at 11,769. So I've got 60 point stop. Very, very tight indeed. Even the sort of like the spread could be that much by the time we get around to there. I'm targeting the move to 11,229. So the stop is way too close. Should I give it a bit more room? I mean, even that is really, I'll give it a little bit more room. So this takes it down to a 5 to 1 risk reward, which I don't think is bad. Or I can still keep that sort of like quite.
Very indecisive today, Steve. Come on.
Yeah.
You got a gun to your head. It went off ages ago.
Right. Here we go. There we go. 6.75 to 1 risk reward, Joe. I'm going to go for it. Selling here 11,709. Stop at 11,789. Target 11,169. Good night, indices. Forget the Santa rally this year.
Okay, yeah, I mean it's going to be a mad old day, so just be careful out there, guys. We're just having a bit of fun here. One of us has gone long, one of us has gone short, expecting some pretty substantial moves in the market. So yeah, that hopefully gives you an idea of the sort of level of volatility that could occur today. I'm not saying it will, but you need to be ready for it.
Yeah. Okay.
So let's just take a look then at the day ahead, and we can see on the economic calendar at 1:30 there we have the US consumer prices. Prior to that, we've actually got some German data, the ZEW index, which is due out at 10. Tomorrow morning, we've got inflation numbers from the UK, so they're coming pretty thick and fast. And we'll have that to deal with tomorrow on the sterling side of things. For the rest of the week, we've got the Fed Reserve policy decision. Obviously, anything that they come up with or mention is going to be significantly linked to the data that comes out today. So we are in for a few days of volatility here. And on the Thursday, we've got Swiss National Bank, Bank of England, and ECB. So a hat trick of central bank policy coming out on Thursday. So that wraps it up from us today. We will try and get a stream going maybe around 1:30 for the CPI number. So if anybody wants to tune in, we'll try and do our best to cover something on that and see the initial fallout and what sort of reaction that we get.
Yeah, lovely.
Okay, have a great day, everybody. Best of luck, and we may see you a bit later.
Cheers.
Bye-bye.